I've got some really interesting stats this time. So I've just put together the autumn market update. I'm going to start with the sales market and give you an idea of what's going on there. I'm pleased to report that the UK housing market starts autumn with a lot of momentum. We've had a post-lockdown mini boom, and the summer of 2020 has definitely been busier than usual. So one of the stats that I really like there is the mortgage approvals being up year on year. So August again has seen an incredible month for new mortgage approvals, which is fantastic. Although the overall transaction levels lower than last year, that is to be expected because we had the period where we couldn't do home moves, and obviously the market's going to catch up. So just getting into it, and I think it is fair to say that the housing market has enjoyed an amazing burst of summer activity since reopening in June. Buyer demand has officially soared up about 34% in comparison to a year ago, and that's a statistic from our friends at Zoopla. According to statistics from Rightmove, supply to the marketplace is also at its highest level since March 2008. So again, throughout the last few months, all I'm hearing is reports of record numbers of people trying to sell their property and entering the marketplace, which is great. There's been over 81,000 property sales recorded in August, which was up by 15.6% on July, so it just gets stronger. And competition in the markets has been leading to approximately 1 in 8 properties selling at or above the asking price, which is a stat from the National Association of Estate Agents. Larger properties and those with gardens are proving immensely popular, with the impact of COVID-19 set to have a lasting change on our home and work lifestyles and ultimately our criteria and needs from our next home. Now, last time I did a talk about the effect of COVID and how that's changed people's buying habits and their criteria and what they're looking for. And again, that information just shows that that's continued, and people are looking for more outside space, home offices, and things like that at the moment. So ultimately, the economy and consumer confidence have both shown signs of improvement throughout the summer, which is great. The economy has grown by 6.6% in July, which is a stat from the Office of National Statistics. However, it still remains about 11% lower than pre-lockdown. But as I said, consumer confidence does continue to rise. Recovery does remain cautious as the government battles with balancing the economy and public health. But stamp duty holidays have offered a saving for many buyers. And although interest rates remain low, a reduction in high loan-to-value lending products is impacting on first-time buyers. I'm certainly seeing a lot of the lower-end activity is coming from buy-to-let investors. There's plenty of them out there at the moment, and there's plenty of good deals to cash into, which I'll come back to a bit later. Just to remind you all of the stamp duty, at the moment there's a saving of up to £15,000 that can be made on purchases, and that obviously depends on the value you're buying at. And good news for investors, buy-to-lets or second property purchases are also benefiting from the stamp duty holiday. However, the 3% surcharge still applies. So again, depending on what sort of level you're investing at, depends on what saving you're going to be making. So slightly looking ahead now, and what should we expect moving forwards? Well, look, simply properties are selling quicker than a year ago. Latest mortgage approvals suggest that the market is returning to more normal levels. However, the forced pause in the housing market will likely mean 2020 sales levels will be below those of 2019, albeit not as low as many have feared. UK house price growth is at its highest level in over 2 years, and revised forecasts anticipate property prices will end the year 2% higher, which represents a huge difference to the negative expectations first predicted as the market reopened back in June. And of course, interest rates are predicted to be held at 0.1% until 2022. Now, just a quick tip, if anybody watching is thinking of or trying to move, then I would definitely suggest you don't delay at the moment. With sales needing to complete by the 31st of March and the heightened level of transactions and what's going on, meaning that things are taking a little longer at the moment, the window of opportunity for the stamp duty holiday is getting smaller, but it is still here. So I see no real signs of activity slowing down as of yet. I'd love to know your views for the future of the housing market, and if any of you are active at the moment, just give us an idea of what you're experiencing. Use the chat box and just let us know what's going on out there and how you're getting on. Now moving on to lettings, and I'm just going to leave this on for a second. Obviously, I'm assuming a lot of people watching here are landlords and property investors. Just take a look at the tenant demand and the increase we've had during the summer. It's absolutely phenomenal, right? Up by 49%. So similar with the sales market, demand in the rental sector has increased massively, as you can see on the screen. Now, I can absolutely resonate with that, as we've seen the volume of new tenants register into our mailing list rise by around about that level over the last few months. So it's definitely it's definitely the right kind of stat from what we're seeing. Activity's gone through the roof again. But here's the thing. New instruction levels in the marketplace are lower than normal, which is it's just a continuation of pre-lockdown trends. So average rental values across the UK rose by 1.5% in the year to August. Yields remain really attractive for investors and landlords, and I'll come back to yields very shortly when we take a closer look at the region more specifically. But increased demand and a shortage of supply in many areas will cause growth in rental values over the coming months. Now, personally, I think it seems absolutely crazy that the official recorded increase is only 1.5%. With tenant demand so high, I wouldn't be surprised if that figure really is a lot higher in some areas. I certainly feel like it is in our area here in Wolverhampton. And a final stat, going into the end of the year, just 13% of tenancies are due to expire during the final quarter of the year. But of course, I think landlords will be keen to avoid unnecessary void periods, and it would appear a lot of tenants would rather hold off moving at this time too. So further short supply looks to be on the horizon, and again, I think that's only going to fuel potential rent increases even further. So here's a quick snapshot of the country. At 3.4%, annual house price growth across the UK is currently at its highest level since March 2018. As you can see there, just from the percentages across the country, price growth is at its strongest across the East Midlands and the North West, but across all regions the trajectory is pretty positive. As you can see on the graphic, West Midlands is just above 4%, so we're certainly holding our own round here. There have been high levels of activity over the summer months, with Rightmove reporting sales to date in 2020 are just 5% lower than 2019, which, with many areas of the UK seeing properties selling quicker than a year ago. Considering the lockdown where activity stopped, it's definitely clear to see that activity levels have caught up over the summer months. And now to the regional snapshot, so more specific to our area in West Midlands. And in particular, I've got some really juicy stats for those of you that are actively investing, which might get you a little bit excited to be in the market at this moment in time. It's estimated at the moment nearly 2 million people own buy-to-let property across the UK, with property being regarded as a safe haven asset. At 5.4% average, the gross yields on residential property across the West Midlands are pretty attractive. Top performing areas, Birmingham, Nuneaton and Bedworth and Wolverhampton are the strongest performers in the area, with gross yields currently above 6% on average in all of these areas. So when people ask me why they should look for buy-to-let opportunities in Wolverhampton, quite simply, this is why. Stats confirm it. Gross yield is generally above average, tenant demand is up 50%, new listings are down. Surely a recipe for success, right? So next, here's a quick list of the strongest housing markets across the region, which again displays really positive growth. Property prices across the West Midlands were 4.1% higher year on year as the housing market reopened in June. And Wolverhampton there at 4.7% growth. Local property owners, I'm sure you'll be pleased to see, in the last 12 months, best part of 5% in our area, so great. So activity across the UK has been absolutely insane, with Rightmove reporting August 2020 as the busiest month on record. Now, I believe they started recording those stats just over a decade ago. So that basically means that they've recorded this August as the busiest month in over a decade, which is quite phenomenal. With a significant rise in the number of sales of larger 4+ bedroom detached houses and 3 to 4 bedroom properties. And of course, these are slightly higher value properties where more stamp duty savings are going to be made. So again, it's really not surprising that people have been cashing in on this, and we've seen a spike in the sales of those types of properties. Overall, the number of properties for sale across the UK was up 10% in August year on year, hence where they're recording these record months. Homes across the UK are selling more quickly too. Nationally, the average time taken to sell a property fell to just 53 days in August, which is down from 62 days in August of last year. But here's the thing. Sensible pricing still remains absolutely crucial, as correctly priced properties are nearly twice as likely to go under offer within 4 months of listing than those that have had their asking price reduced after initially being unsuccessful. So, you know, absolutely great market, but just be competitive and be sensible about it. So there we have it. That's the market update for autumn. Now, obviously, if anyone wants my full written report or update, just send me an email. It's on the screen there. Obviously, I'll be more than happy to send it over. But again, as I said earlier, if anyone's active in the marketplace right now, put something in the chat. Let us know how you're getting on. Just put some opinions. If anyone, what do you think holds to the market? How do you think we're going to go into the new year?